Good morning. It's March 29th, 2023, and I've got some data I have to share with you today. The first, I'm going to head over to a chart on Bloomberg. So let's head over there now. What I've got here is Discover Financial's card average loans. And as you can see from the chart, it's going from the bottom left to the top right. And so folks are having a lot of leverage. These are consumers. This comes after the other data we shared with you talking about how people are expecting to reduce their spend on things like hotels and restaurants and other types of services that we thought were pretty strong. Remember when the consumers were shifting from goods to services? So number one is beware of people saying that everything is just fine. They're either going to have to pay off these loans with any of the remaining savings that they have, or they're going to have to keep reducing that spend even further to be able to pay off these loans. You can't just keep putting loans, which are now even more expensive, on your card. So keep that in mind when you're thinking about chasing any kind of rally going on right now. Now we're going to head over to the Longbow dashboard because probably on your mind, you're thinking about tech. Tech has had a huge rally this year. We talked about it in the Longbow arrows this morning. So where are we on those trading ranges? Here I've given you some ETFs and stocks in the tech sector as well as the TLT. So that's the 20-year Treasury ETF. Let's start with the Qs. So where is it? Middle of the range. XLK, middle of the range. Some of the biggies, Microsoft near the top end of the range. Obviously, yesterday tech got hurt, and then today tech is bouncing. We've got Apple kind of middling in the range, Google middling of the range. And then as Bloomberg pointed out today, you've seen it where, when treasuries are up, tech is down. When tech is up, treasuries are down. And what do you see here with the TLT? When tech is up, treasuries are down. So if you're a believer that this might be short-sighted, either people pulling their capital from financials as they got worried from the banking crisis, throwing into tech, or those focused on the Fed not just pausing, but reducing rates this year because of the damage to the economy, you have to decide fundamentally, what is it you think? And if you think that these things are on a tear, you've got short-term bullish, medium-term bullish, obviously not the day to be putting money in. You'd be looking at for the low end of the range. But if you're on the opposite end of the spectrum, if you think this is just, a short-term blip and we're going to have pain in the economy that's going to also translate over into these tech companies, you'd be looking to trim and or short when it's at the top end of the range. There you see the refresh. So Longbow refreshes all day long. So if you want these updated trading signals, we now offer a free trial, which you can get. I think it's 5 tickers for free. And then if you want to do things like I do and have different tabs and a bunch more tickers, you can add on to that and pay per month. We wanted to make sure that this kind of technology, these algorithms, are really available to the everyday trader so that you can make better informed decisions from a technical perspective as we get through this year, which we expect to be volatile. See you back tomorrow.